Yeah, all right. Good morning, everybody. Happy Tuesday. Welcome to the morning show here on Stock Market TV. Spencer Israel, JC Parets, Steve Strazza, Alfonso de Pablo's full crew with you this morning. Glad to be here. What are we talking about today? Chat. What are we yelling about here? Crypto? Yeah. Strazza's bearish crypto. We should probably talk about that. Got some earnings. Oh, hims and hers. Ouch. Talk about that. Home Depot. Talk about that. The guest today, Adam Koos, will join us. He hasn't been on the show it's been a minute for Adam. Let's see. When's the last time Adam Koos was on the show? Last summer, I believe. Last summer. Anyway, Adam Koos will be on from Libertas Wealth Management. He'll be on at 9. We'll have Kenny Glick on. We'll have Mary on. And that is what we got. Chat's all here. Is that true? Is everyone here? All risky? Are you around? We got the YouTube chat. We got the Stock Market TV chat. We got everyone ready to go. Everyone's here. And they've all done what? They've all smashed the like button. That's right. They've all done that. So here we go. Let's start the show.
All right, we back.
Oh, yeah.
Here on the morning show, ladies and gentlemen. Welcome.
Welcome indeed.
Happy Tuesday. How's my tan? I still got my tan going. Not bad.
You still got it. Yeah.
Not bad for mid-February. See, you could take the Cuban out of Miami, but you can't take right? I've been gone for a long time, man. I feel like I don't even know it anymore, you know?
Yeah.
I certainly don't know Fort Lauderdale either.
Is Fort Lauderdale Miami, or is that like?
No, we never really hung out there. To be honest, we never went to Fort Lauderdale ever. Like I can count maybe on a handful of times we'd go to Fort Lauderdale. Definitely never anything north of Fort Lauderdale. That's why I don't know Florida geography at all. I'm terrible at Florida geography. Strazza's not very good at Florida geography either, right? You're better than me though.
I know where I need to go.
Yeah,
or not go.
We would go south. The only reason to go north of Fort Lauderdale was to go to Disney World. And then like maybe you visit some friends at FSU or Gainesville or something like that. But like if you don't need to go to unless you really have a dying need to be in Tallahassee or Gainesville, like those are two places that you never want to go. Like those are places like Newark, New Jersey, like the same category, same category.
Okay.
Right? Strazza doesn't know anything about Newark because people from Connecticut never go to New Jersey.
Nor,
and vice versa.
Nor should they. Okay.
Can't really comment on Tallahassee or Gainesville either. Don't have the experience.
Don't ever go there. They are unless you're going to like a Hurricanes game, in which case that's the one exception. Right? But you don't need to go there.
Yeah.
All right. Let's get into this markets.
All right, ladies and gentlemen, we've got the Dow futures up 100 points this morning. It's 0.25% to the upside. S&P 500 futures pretty much flat, up a couple points, still above 6,000. NASDAQ 100 futures also flat, up a couple of points, 21,425. 30-year bond futures really moving this morning, up over 0.75%, back above 117 for 30-year bond futures. Crude oil down 50 bips, still over 70. Copper up a full percent, still very impressed with copper. 455 for copper futures. Gold down 0.5%, 29.50. Silver down 0.5%, 32.50. With the VIX above 19. Wow, what a move in the VIX. Over in funny money land, Steve Strazza with quite the note yesterday. We'll let him elaborate further. But let's see. We got Bitcoin down another 2,600 points, just under 89,000 this morning. We've got Ethereum. Ethereum's down close to 100 points. That's 3.5% to the downside, 24.22. And of course, we have the Sol down again under 140, 138 for Solana. Boy, that was quick. Total crypto market cap, Spencer Israel, $2.86 trillion.
Whoa.
Down $75 billion on the day. Ladies and gentlemen, how do we feel about this morning's futures?
Doesn't look good out there, right? Let's be honest about it. It's not looking good.
Doesn't look
You mo-
good.
You mocked me for saying this yesterday. I don't know if you've looked at more charts in the time since, but big follow through day.
I'm not disagreeing with anything you're saying. Yeah.
Big bearish follow through day.
Solana failed to
Okay.
break out. Bitcoin never did. Ethereum never got close. Like, I'm not disagreeing with you.
I'm talking about equities too. Things.
Oh, you're
things
talking
are
about
not
equities.
looking great
Oh, so
in the US.
Spain hitting the highest level since 2008. Switzerland
great.
hitting all-time highs today.
Totally.
Those are all bearish things.
I'm on board.
Talk to me
Absolutely.
about markets
European
that
banks
matter.
is hitting all-time high. The ETF.
Listen,
They're
I'm on
bearish?
board. I'm on board with the international trade. You know this.
Okay.
So I'm with you. I'm there. But I want to talk about the stuff that most people own, which is not EWP.
First of all, let's double click on that. I love that nobody owns international. You know, you touch the stove too many times, you stop touching the stove. So now they're like, I'm never gonna own international again. I'm never gonna own China. They're communists. They're liars. Good.
You're right.
Lie away. Commie away. All good. As long as we don't have to give the profits back, I'm good with your communism. I don't live there. It's not my fucking problem. You know what I'm saying? Like, is that selfish for me to not care about the citizens in China and I only care about my own wallet? Is there anything wrong with that, or is that the way it should be?
I think there's probably a middle ground you could find, a healthier place.
I have a confession to make. We have to talk about this, and then we'll get into the markets. Spencer, come on back here for a second. So the other day, I was hanging with civilians, some neighborhood wives, some neighborhood husbands. And somehow my wife is making fun of me. Oh, because we were talking about the day we met. Some long story. So we're talking about my book, right? So the girls were very excited to hear that I was writing a book. They're like, oh my God, JC, what is it about? And I'm like, I gave it some thought. I'm like, basically, it's trying to expose human flaws and try to take advantage of the poor decision making that humans make for my own profits. And like, I could probably say it in a better way because they went from like
you could hear a pin drop
excited to like, okay,
yeah,
like that's probably not the best way to explain the book.
No,
especially to a group of normie girls.
You sound like an ass when you say things like this.
I know. I thought about it.
I try to tell you. I try to tell you.
I know. I definitely sounded like such a dick. Like they were like, "Oh wow, that's so great. Writing a book. What is it about?" And then it was like, "Oh."
Yeah, there's stuff you shouldn't talk about around Morgan's friends. So like inflation, stay away from that too. You don't do a good job on that around normies. Just stay away from inflation totally, completely. Just don't even mention it.
But it's so I can explain it better, and then in the book you'll read all those things, right? But I should probably not lead with that.
No, I would start with the fact that you are going to be, if you want to stick with the exposing theme, exposing how wrong some people are about the market and why you think that, right? That's what I would start with.
Right? Mostly the vulnerabilities of humans, kicking people when they're down. Like that's the good stuff.
I was just gonna say, could you just see Morgan's face
nice when I say it?
JC's telling all of the their couple friends that the best time to kick somebody is when they're down. Like just keep these things to yourself.
It's not a good look, right?
They're not good takes either.
I think they're good takes.
I wouldn't put them in a book.
I'm done. It's already in the book. So,
okay.
So, the other day, Strazza's like, "Oh yeah, how much writing did you get done today?" I'm like, 15,000 words. He's like, "Whoa." I'm like, "I know." Yeah. All right. So anyway, that happened the other day. I had to get it off my chest because it definitely went from like super high and excited for me to like, what an asshole.
To what Steve said, there's probably a balance to be struck here, JC, where like less cynicism, right?
You can still be obnoxious without being mean.
We could bring you a little bit more towards the kumbaya side of the room. That would be better, I think.
Yeah. All right. I'll give it some. I'll work on it. Just a little bit. Asked a lot in the coming years. JC, what's your book about? Right.
Here, I'm just gonna throw you an alley oop for another one of your favorites. I want to talk about most stocks. So
Okay.
don't start quoting what the major averages are doing to me
Okay,
right now.
we'll talk about most stocks. What is most stocks? What's the best way to gauge that out of curiosity?
The price action last week was like eerie. It was strange, like the intermarket action, right? As rates were coming off, the interest rate sensitive groups that I would have wanted to be in for a bounce, right? If I'm betting on rates coming off, regional banks, speculative growth, home builders, all getting slammed. That was sketchy. Then the follow through that we saw today, or I'm sorry, yesterday here this week, it's no bueno. What's happening is we're getting these tactical tops. We're experiencing damage to a lot of tactical trends. All the VWAPs from the election are pretty much lost out here. You know that?
I don't know what that means. All the VWAPs from the election, like on the S&P and the Nasdaq and like the
Yeah.
sector indexes.
So one thing that we've been doing with our VWAPs is anchoring them from the election
I
candle.
like that idea.
Yeah, they're all gone.
No, I know, but what is all?
Thanks,
was
Spencer.
that?
Thanks, Spencer.
Thanks, Spencer. First
my bad.
timer.
My bad.
First
Yeah,
timer.
No, we know you're here. This is
Yep.
great.
Sorry.
Thank you. Prices
So
below
when you,
them.
hold
I'm
on. So
just
when you
about-
talk about the anchored VWAPs from the election, you're talking specifically about what, like sector ETFs and like the major indexes or something?
Just pick one. Pick one. Go put a VWAP on it from the election. Prices below it. Anything.
Well, not anything, but
It's where
okay.
we're at, JC. It's where we're at.
Here,
It's
throw up
ugly out there.
slide 2, please. Throw up slide 2 because
It's getting
actually, you
dicey
know
out
what?
there.
Hold on. Throw up
Oh my
slide.
God.
Throw up the discretionaries first. So right now it's the new slide 3. Throw up that first. Let's set the stage.
I mean, let's talk about a failed breakout in the XLY XLP. How you doing?
Is it a failed breakout? Oh, you're talking about the ratio. Okay, hold on.
Certainly looks
So
like
this is a consumer-driven economy, is what I'm told, and there is 70% of the U.S. economy is the consumer. Is that right, Strazza?
Yeah.
Yeah. Okay. I defer to you. I don't know.
Yeah.
These are the things that I'm told. Sometimes
Yeah.
I'm told things that are the truth. Sometimes I'm
Hey.
told things that are not true.
You nailed it with your 70%.
Who's listening, huh?
Great.
Come on.
Really good.
All right, so we are above the prior cycle's highs, which I would argue is not bearish, right? The bearish implications, in my humble opinion, would be a very humble opinion, would be if we are below those prior cycle highs. So if we're going to do a sum of the parts analysis on consumer discretionary, despite the fact that you think that home builders are more like industrials, and I completely agree with that, whether what you and I think is irrelevant because they actually are consumer discretionaries. I don't want to say irrelevant, but when it comes to the math and the dynamics of this sector, the homies are in there and they were an early leader and now they're a lagger. Can you throw up the homies, please? Are you betting, Mr. Steve Strazza, that the home builders are going to complete a massive top in the middle of a bull market?
If they do, it would be a source of concern. It's something that I would assign extra weight to.
Couldn't agree more. In fact, my exact words were, I couldn't agree more. Like you said the same thing I did. I said it in different words. Let's see. What did I say? I said, to me, what did I say? I said, this would be a big change of character for the overall market, especially the consumer stocks. And I said, it's not something that I would expect to happen, which is why if it does, that would be a major blow to the health of the overall market, in my opinion. How was that? I thought that was pretty well said.
You never want to, on one group of stocks, be like, that's it, it's over. I think you could do it with semiconductors. We actually talked about yesterday.
That. We did that. We did that with consumer discretionaries, right? Last
sector.
summer, we said that.
Yeah,
we said if
fine.
discretionaries break, bull market canceled.
I don't think you want to go with something this specific. This is a small group of stocks. I don't think you want to say, hey, if we lose this small handful of stocks, that the broader market, bull market, is maybe over. However, if I was ranking the most important groups of stocks that I glean information from, this is at the top of the list. It's in the top 3.
Well, it's also the most vulnerable because some of the others that we would both agree are in that same category of importance are not as vulnerable to a breakdown, right?
I mean, is SMH not vulnerable? We've seen them sell the semiconductors in a big way. Over
SMH
the
is not as vulnerable because it's not at that support that the homies are in, right?
you could lose regional banks in a jiffy here. I mean,
Ooh.
is this not the level in the bank indexes? So when I look around at
Regional
these
banks are in the
important,
middle of a range, though.
I don't know. You really want to see regional banks back below those pivot highs from like July and September of last year?
I'm not discounting the importance of regional banks. Quite the opposite. I would put regional banks in the same category as semiconductors and home construction and some others. All I'm saying is that home construction right here is probably the most important, to your point, because of just how vulnerable it is. Like, it's not in the middle of a range like regional banks or semis. It's literally at support.
Here's what's happening,
Right.
JC. All of the gains from the election, post election rally are gone now. They're gone. Giving it all back. And when you look beneath the surface, frankly, and when you look at internals, the damage is far worse than what's being masked on the surface by the biggest stocks in the major averages.
So last week, you know how many S&P sectors closed at new 3-month lows last week? 0.
I don't know why are you cherry picking 3-month lows?
It's a quarter.
Talk to me about 1-month lows first.
Okay, so there were what, 2 or 3 that made new 1-month lows?
Got to start somewhere.
Agreed.
No 1-month lows out in Europe.
No. A lot of new 1-month highs, a lot of new 3-month highs, a lot of new all-time highs.
I look at U.S. equities.
The best ones are above the great financial crisis highs. All the shitty ones, like the pigs, are all like making new highs, the highest level since then, right?
I look at the price action in U.S. equities over the course of the past few weeks. Within the context of the price action in equities markets around the world, I think the best stocks here are being used as ATMs. Look at the last 4 candles in Palantir. They're selling the hell out of this thing.
And then where does rotate? First of all, Palantir was the best performing stock in the back half of last year. So
That's
like
my point.
some give back is warranted, well deserved. What about the rotation? What about medical devices closing at new multi-year highs, right? So where does rotation come into the conversation? And I know you're not going to tell me that medical devices are defensive because they're healthcare, because we know they're not. Some other areas of healthcare might be more defensive, but we know for a fact that medical equipment stocks are the opposite of defensive, and they're making new multi-year highs, excuse me. So, like, and you're obviously not wrong in the things that you're saying. I'm not disagreeing. Everything you're saying is absolutely right. It's just math. But my question to you is, where does the sector rotation, forget the Europe. I mean, not to forget the Europe, because that's important too. We're seeing rotation into Europe and Asia and Latin America, great. But within the United States, the stocks that most people own, right? Like, we give a shit about most people. But let's go with it. Where does that sector rotation fit into this discussion?
It's not going to be enough to save the vast majority of people, right? If there's a hardcore rotation out of U.S. equities, or if God forbid there's some sort of environment, and I don't think you want to make this bet, there's some sort of environment where U.S. stocks are not going up and the rest of the world is working, people's portfolios aren't ready for that. It's been 15 years of, hey, that's not the way to invest. 15 years of positioning in the opposite fashion, right? Positioning for the opposite environment than the one that it certainly looks like is upon us. I think that would take some time to adjust, and people are going to miss out on these international gains, and they might be stuck in some big lagging areas here in U.S. equities.
Good.
I think it would absolutely stink for a lot of people. And to come on here and say, oh, Spain's making new highs is not an accurate representation of what's going on for most people. Most people, JC, their portfolios really look something like the major averages.
Good. So the fact that, to your point, throw up slide 2. The fact, to your point, growth stocks have been outperforming for so long. Technology has been outperforming. Therefore, the United States has been outperforming because of that large exposure to those areas. What about so what you're saying is if it's rotation internationally, then we should expect that high growth, U.S. dominance to deteriorate, and it's probably more of a value sort of situation. Is that too broad, or do you think that's right?
I don't know where I fall on this growth value argument anymore. And guess what? Stocks have changed so much.
Yeah.
What's growth today is not what growth was just a decade ago.
No, that's right.
I'm one of those people who, maybe this is a sign of the top. You could make a sound argument to me, and I won't call you crazy if you tell me value will never outperform growth again. It's just, it makes sense. So I don't know. I think eventually you go back to a place where value has its time. It'll probably be more of a cyclical situation than value. But growth stocks,
How old are you,
value
Strazza?
stocks all day.
How old are you?
How old am I? I'm 35.
35. I like how you have to think about that. I have to think about it too.
Changes.
That comes with
changes.
old age.
It changes.
How old am I again?
Every now and then. Yeah.
Sometimes I have to do the math. I was like, well, I was born in 1982, so that would make me right.
It takes me a full year to remember, and then it changes, and then it's like, oh, okay.
I think I'm gonna stay here for a while. Like as people ask me over the course of the next few years, I think I'm just gonna stick with the number I'm at now.
So 35. You're 35 years old.
I'm just gonna stay 35 for a while. Yeah.
35 years old. I mean, you were born in 1990.
I like it here.
Were you born in 1990?
I was born in 88, dude.
88. All right. Sorry, my math's not so good this morning. You were born in 1988. So you're 8 years younger than me. Yeah. All right. So you kind of got going. You kind of got going 2011, 2012 in this market. 13.
Yeah, absolutely
Yeah,
right.
all right.
I mean, I was
someone
dabbling.
like yourself to assume technology and high growth is going to outperform forever. Someone like yourself.
No,
and where you started your career does not surprise me.
When I came in, there was a spurt. People were excited about international. China was a big story. Commodities were all the talk. Commodities were all the talk. Like I came into like a world of coal and uranium and gold miners. It was cool. So by the
way, Christos is right. If you're born in 1988, you can't be 35.
I told you all to not do the math. Okay. I'm staying here at 35.
Oh, I see.
All
so
right.
You're a few years older. Ah, got it. I see. I see what you did there, Strazza. That's not okay. You can't do that.
Listen. Maybe I was born in 89. None of you know.
No, or care. I was really just asking so that I could pinpoint the moment you got into this market, and you're nailing it. Commodities, international. That was the top for all that shit.
Yeah. I remember all the names. It was fun. Freeport McMoran.
I like how Bill's calling us out that he was eating sushi before we were born, which is cool because sushi wasn't that cool back then, right? Like sushi's cooler now, Bill, right?
Sushi is so trendy, it's almost not trendy anymore.
It makes me too happy. Like sometimes I just want to cry because like when I put that piece of toro in my mouth, like I want to cry right now just thinking about it. Like it really is an emotional, like religious experience for me. And those of you who have had sushi with me understand. Look at me, I'm tearing up as we speak. Look at this.
I might go out for some sushi tonight. Just
I want sushi for breakfast, bro. Let's go.
Let's go get sushi right after the show.
Dude, I'll go right now. Don't tempt me. I had a great sushi roll that they brought for me for my birthday because everywhere we went, Morgan told everybody it was my birthday, even though my birthday had already passed. Dude, they brought me like this like roll. It's like a sushi roll, but with ice cream in the middle, right? And then like pistachios on top. Woo!
It was good. Was it like a mango sticky rice?
It was a dessert. It was a dessert. Yeah, no. It wasn't sushi, but like they make it look like sushi. You know?
No, I get it.
Yeah, it was fucking awesome.
You like the mango sticky rice?
Yeah.
That's a dessert I'll get down with. That's some stuff.
Yeah, I can get down with that.
They put like that hot whatever on it. It's disgusting. Oh, so fantastic. Love some mango sticky rice.
What's up with Kenny? Do we have Kenny in the house today?
BTC 50K. Ravi, don't say that.
Kenny's on his way. He
nice.
may not be here.
All right, let us know when Kenny's in.
Yeah.
But I wanted to talk about this Japan chart before we got into our whole sushi discussion.
And speaking of Japan, I think you can actually eat sushi from the gas stations, at least the 7-Elevens.
Dude, you see that? You see that segue from sushi to Japan? You see what we're doing here, guys? Come on.
We just got, shout out Japan, just got our first 7-Eleven in the Florida Keys. People are very excited. I'm thrilled about it. So
the nachos at 7-Eleven. Not bad. So I keep being told that Japan is going to be the crisis, right? This like carry trade and all this stuff. Like this is, the whispers. Those are the whispers from the Perma Bears. And
Japan looks great.
I mean, that could happen, I suppose. I'm not seeing it. Do you look at the at the Japanese yen rally because it's ripping again this morning. If I'm right, the dollar's coming off a little.
I don't know. Is it? You're usually my yen guy.
Yeah, yen's up 20
bit.
bips. Dollar's getting slammed, Strazza. Dollar index down again today. Had a nice reversal yesterday, held in okay on Friday, now giving it all back. Let me ask you this. If the US dollar breaks down to new lows to follow the zloty, I don't know if you saw the zloty making new 4-month highs yesterday. Shout out Poland. If that dollar breaks down to new lows, what does that mean for you and your decision making in the market, my friend?
I would like to say it's going to be a party for risk assets, but it's not what we've seen since last week. So I think things will be good, but you want to stick with what's trending well right now, and that's ex-US equities.
So we've got Swiss.
Yeah, I think eventually
Swiss franc is hitting Swiss franc hitting new multi-month highs today. British pounds hitting new multi-month highs today. Shout out Zloty, highest levels since October. The Swedish krona, new multi-month highs.
I have thoughts.
Please.
I like the commodity currencies. I like AUD and CAD. I like the way that they're set up more than the others.
Chilean peso, to your point, making new 4-month highs today.
That's great. And I think there will be a time to step in and buy these dips that we're getting in the US. I don't think it's over yet. The price action today reminds me, remember that we had those scary candles in growth like last summer that started the messy sidewaysness? No? You could still see it from June, July of last year, leading into the August lows with some big like red candles, some nasty sell-off days, some stuff that really showed up on short-term rate of change indicators. That's what's happening now with these stocks like Palantir. This action, JC, it's showing up on the short-term rate of change indicators. Like this is the worst 4-day streak for Palantir almost ever, the worst since the bear market lows 2-3 years back. And then there's no 4-day streak worse besides that. So like this kind of stuff is amounting to something that at least is making me think I'm going to be a little cautious here. Maybe we get some more messy, more corrective action, maybe some steeper drawdowns in some of these areas over the course of the coming weeks to months. That's what it looks like. Just the volatility. I don't like these big red candles. When you get these big red candles and we're closing on lows, closing on lows, closing on lows, I just do less. So that's where we're at for US stocks right now.
I got one more chart and then we're going to bring in Adam. We're going to bring in Kenny.
Yes.
One more chart and then we'll bring in Kenny.
I'm talking about these things and the charts aren't going up. Throw up the Palantir.
I'm throwing it up right now. Throw up slide 2, then we'll bring in Kenny. So here's what I'm looking at. So just as a friendly reminder for everybody, Palantir rallied 2,000%.
Is that good?
Whatever.
Is
Well,
that a
now
lot?
we're here. And now here we are. It's getting slammed.
Spencer, can you throw the Palantir chart, please?
Fonz is doing it.
Come on,
Let Fonz do his thing, okay?
So 2,000% return in Palantir. Not bad. Not bad. 2,000%, right? Because that happens all the time. 2,000% for Palantir, and we haven't even retraced 38.2% of that. Is any of this unusual at all, Strazza? I mean, this seems like perfectly normal behavior, no?
All right, so if you don't want to take profits in something like Palantir here, and you've been in since the primary trend reversed, where do you want to take profits?
Well, it's not, first of all, you should take your profits where your target is, right? So if you hit your target, you should take your profits. I'm just taking a step back here. I don't own any Palantir. I don't give a shit. It can go to 0, it can go to 1,000,000. I don't give a fuck. What I'm saying is it rallied 2,000% and has gone down for a few days. Like, are we like gonna like make a big deal about this?
Stocks that go up fast also go down fast. That's
Spencer Israel paying attention.
Yeah, okay. All right. So back to my rate of change chart that you guys clearly didn't look at. It's a change in character. That's all I'm gonna say.
Hey, I didn't say anything.
Here, I'll make you bet you don't get new all-time highs from Palantir until I don't know, third quarter. Third quarter. This is the kind of stuff that means at least sideways for now. Okay.
I'm not gonna make that bet because we could very easily make new highs before the third quarter. We can make new highs this quarter, but
Great,
I
so
don't think that you're far off. I think that it wouldn't surprise me at all if we don't make a new all-time high. It wouldn't surprise me if we make a new all-time high ever, right? I mean, it's an uptrend, probably does, but I don't think you're that far off.
if you're in this from the teens, you're up however many X. You've watched the valuation for this company balloon. You've watched the narrative go from this being one of the most hated stocks in the market to one of the most loved stocks in the market. They can't stop talking about it on TV all day. Okay. The situation has changed. You're up
TV
huge.
during the day?
And then you see this 4 bang, bang, bang days. Why aren't you protecting yourself? That's kind of where I'm at.
Serial killer sits there watching television every day on basic cable.
You know how much I learn? You know how much sentiment information I get from having this on during the day? I'm watching all sorts of things.
It's not good for the mind or the soul.
You're lucky to have somebody like me
Does
out here
Perlman know that you watch
attention.
TV all day?
No, I lied to him. He doesn't know that the TV's back in the office.
Yeah, he knows. He'll tell you just how dumb that is. Okay, can you bring in Kenny? And then we got Adam Koos. We got a squad today. Let's go.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Kenny Glick in the house. What's up, my friend?
Did Strazza just say, you need people like me? You need people like me to stick your freaking fingers. What's up? You need people like Strazza. You need people. You need bears. Hi, I'm back. What's up?
Speaking of bears,
this market. No, let's talk about Palantir. Let's talk about Palantir as a shareholder from the IPO.
Really? You got in on that IPO?
Okay. I was buying it pre-IPO. That's how much of a fan of Palantir I was. I read about this company back in the day, and
that was like in the middle. It was the middle of the pandemic, right?
Yeah. And it didn't work that first day. And I was like, come on, really? This stock's not going up on the first day? I mean, I didn't like it when it became a meme stock. I kind of was out. I sat out the meme craze. But I was a fan of it because when I read an article about Palantir, they used the word clandestine. And I love that freaking word.
It's a good word.
I love that word.
Can you explain your interpretation of clandestine?
Clandestine is secret society. That's stuff that there's a group of people doing things that need to be done, but they're doing it in secret. Kind of like Jack Bauer, 24. So I was thinking, wow, I could buy into the Jack Bauer Association, maybe even own part of the CIA. I'm in. And then I saw that guy's hair. I'm in. This guy's got a T-shirt on with crazy hair at the CEO. I'm loving this guy. And then he starts talking about killing terrorists. I'm like, man, if I didn't like this company already, I love it now even more. And when it crashed down under $10, I couldn't believe it. And I didn't get back in into the 30s and the 40s. And the target remained 120. Because, again, I've been doing this my whole life. IPOs that are good, when they get into the 50s, they generally get to 80. And when they get to 80, they go to 120. So at 120, we were like, chickadee ching. But we're not thinking the story's over. But chickadee ching at 120. And then Dennis Dick's out there going, look, I got to take a shot here at 125 short with a 50-cent risk. This is insane. I'm like, you know what? I'm with you. So at 123,
shout out Dennis Dick.
Dennis Dick nailing it. 125 short with a 50-cent risk. I'm like, you know what? Now is the time. Because if you're wrong, you're losing 50 cents. But if you're right, you're probably going to get a pull back to 80. And I heard the conversation. This is normal. This is normal. The stock just went from 10 to 120. You don't think it could pull back to $80, consolidate, and then rip from here? That's exactly what we're going to do. So
it went from 6 to 120. So that's 2,000%. But you know, I wanted something you said is really interesting. Kind of like having a hair guy as a CEO indicator. You know, if Rick and Fonz out there in internet land, if you're listening, we need to create a list of CEOs with crazy hair.
Bro,
not that many of them.
Good.
I want to go back. I'm talking about Genesis Microchip. There's a company called Genesis Microchip. This is when LEDs and LCD screens were getting popular, new TVs. There was a company, Genesis Microchip. There was rumors of the stock getting taken over because of their technology that was going into the TV. So I bought the stock. The company reported earnings and they were blah, blah, blah. But the CEO comes on wearing the most obvious rug on his skull that I have ever seen. It was like a dead creature just hanging out up there. And he's going on and on about the earnings. And I'm immediately typing my thing. If this guy wants us to trust that's his real hair, can we really trust this company? Sold. And that was my entire basis of shorting the stock. I got out of the long and like, you just said the company's getting taken over. Not with this guy's hair. Sold and short. And
so then how do you know when it's bullish hair or bearish hair?
Bearish hair is a rug. Come on. Come on, embrace your baldness. It's fantastic. You never have a
JC.
bad hair day.
You see, bullish hair is when they don't care. They're too busy to care about their hair.
That's
They
bullish hair.
they obviously
Oh.
don't care.
That's
Got it. So
bullish.
they're
bearish
too
when they
busy.
care too much.
Right.
Bullish when they don't care at all.
Exactly. Right. Like
This
Elon
is
Musk. Elon
alpha.
Musk.
You see this, guys, folks out there listening in? This is what's called alpha. We are delivering alpha as
Exactly.
we speak. This is
Musk don't care. The guy, what is he? Is he worth $1 trillion? He can't get a good haircut. He doesn't care. He doesn't
Right.
care. Who
no,
cares?
you're right. I love this. I love this. Kenny, give us what this morning. What's moving? Give us a stock. Go ahead.
All right. Speaking of stocks, I want to see go to zero, but probably won't. This HIM stock. Let me get my chart up. Hang on a second. Usually, I like stocks that have already gotten beat up into earnings, but I think this company is just a complete scam, selling generic boner pills. And speaking of hair, they try to sell you onto this Propecia generic. I think the company's a scam. I hope the stock goes to zero. But if you look at today's chart, it's just sitting under VWAP anti-Dufresne right now, which kind of scares me. And again, I'm not buying it, right? But if it breaks that VWAP, I'm going to have to think about buying the stock. Right now, no position, just rooting for it to go to zero. And I hope it does. And again, if you're long the stock, I feel bad for you. Don't buy into scam companies. If it breaks down under these levels today, you're looking at a stock that's probably going to 35. And if it doesn't hold 35, it's going to 25 and hopefully zero. But let's talk about Carvana. Crushed this short. Again, if you guys are watching me on Twitter, right here is where Hindenburg was telling you to get short. I specifically went on Twitter to make sure you guys didn't short it here. Hindenburg was shorting it here. Then they tell you the scam right there. And I was telling you to buy it. And then the numbers came out and you had a blow off top earnings reversal on Carvana. And right now, I'm still looking to short this stock today, just looking for it to roll over. And one of my old friends, Cliffy, is back. So we bought some Cliffy this morning. Not a lot volume. And so far, so good on Cliff. Just waiting to see if this turns around a little bit more. 20 more cents. We got ourselves an earnings reversal. And again, I think these are where I'm going to focus my attention. I think tech might be, this is what we're going to see, some churning and chopping around. Maybe the Schlumbergers and the Apaches and the Alcoas and the Cliffs and the Steel, maybe those make a run this year. I'm got my eye on these.
All right. HitTheBid.com, Kenny's room. He's there now, live trading pre-market, through the open, after the open, afternoon, through the close, after the close. Check it out. Kenny, we'll see you.
Rock on. Bald is beautiful, baby. I'll see you.
Never forget. Bald is beautiful. All right. JC, who's our guest today? Adam Koos. Is that true?
Yeah, let's do it.
All right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
What's going on, guys?
Oh, what's going on?
I'm just
How we doing?
taking over the show.
Wait,
Apparently, JC sees me and he leaves.
I think JC's internet just conked out as you were coming on.
That's really dangerous. Now you put me in charge of this thing.
That's
You and
a
I. Spencer, what are we
interesting
gonna talk
coincidence. I
Say
don't
again?
know. Oh wait, he's back.
about?
Is he back? He's back. Okay.
I don't see
What's
him
up?
yet. There he goes.
What's up, Adam? How you doing, my
What's going
man?
on? How's that hamster doing that's running your internet?
Dude, I was on vacation. I was down in Fort Lauderdale. I got back. My stuff's all messed up.
Got one of the
I'm
kids,
trying to get back in the groove.
Got the kids like chewing on the Ethernet cables behind you there.
Dude, they are not allowed in here, but they love being in here. Like, it's out of control how much my kids love being in my office.
You always
I mean,
want
there's
what you
just
can't have.
too much shit that could break, lights falling on their heads. Like,
Oh,
there's
God.
just nothing good that can happen.
True story.
Ladies and gentlemen, Mr. Adam Koos,
Thank you.
financial advisor extraordinaire, entrepreneur.
Yeah. I have to say, when I was in the green room, the first thing I heard come out of your mouth was the Swedish krona.
Yeah.
And what I think is funny about that is there's all these, like, how many investments are there out there we can buy? Bonds, commodities, currencies. I mean, I don't even know how many. But one of my early mentors taught me way back in like the late 2000s. He says, whenever you're buying an investment of any kind, whether it's U.S. international bonds, commodities, stocks, ETFs, doesn't make a difference. You should be able to put your hand over the name on, and whether it's a ETF or a company, and make your decision based on the information on the chart. And then I would always say that it doesn't matter if it's large cap stocks or the Swedish krona. If it's going up, we want to own it. So every time I hear Swedish krona, I always think of that particular quote. But
dude, Swedish krona making new highs. Sweden, the Stockholm 30 making all-time highs.
Yeah, and it's very clandestine. Yeah.
Hey, that's
People
called
don't know.
callback. It's called the
They don't
callback.
know.
Adam Koos, also, are you an amateur rap artist, or would you be considered a professional?
I'm definitely not a professional, that's for sure. No, way back in the day, in the beginning of my career, I used to produce a lot of music. I did a whole lot more production and building tracks, and hence the keyboard sitting over here.
That's cool though. I'm into it.
Did a whole lot more of that, everything from R&B to pop to Latin music to hip hop to EDM. But I don't have time to do that anymore, JC. I'm running 4 different companies. I'm focused on this stuff. And honestly, I haven't worked in 23 years. I'm having so much fun. But
I got to talk to you because I'm working on my new DJ set, right? So
nice.
I'm doing some DJing now, right?
All right.
I got to talk to you about some stuff. I've been watching late night YouTube videos on how to DJ. That's nor here nor there. Let's get back to the financial advisor portion of your life.
Well, real quick, you brought up the DJing. You got to teach your kids as soon as they're old enough. Like learning how to beat mix and scratch took so much time as like a teenager. When I was young, I taught my 2 kids how to beat mix. They each took Camden took 1 song and he had it down, and Karsten took 2. It was easy. It's like these
skiing.
kids. It's like
you learn faster when you're younger.
Yeah. Anyway, sorry.
No, all good. I love this. We'll talk offline. But why don't you tell the folks a little bit about your advisory, how you approach markets, just to kind of give them some context, and then we'll dive in.
Sure. Yeah. No, we have a wealth management firm, Central Ohio, capital of Ohio, Columbus. I don't know, manage about $150 million. And everything we do from a portfolio management standpoint is relative strength based, technical analysis based. I've got a pretty unique story in that I started as a financial advisor 10 days before the World Trade Center went down, going door to door. When I was 21 years old, I looked like I was 16, trying to get people 3 times my age to trust me with their life savings when the market was doing nothing but going down, for 18 months. So when the market recovered in 2003, 4, 5, international was leading at the time. It was fun for a while, but then it peaks again. And that was the point at which I decided it was either A, sell the company, do something else for a living in finance, or figure out a better way to manage money. So we got into, like I said, technical analysis, the CMT program. And so we've been using technicals since pretty much mid 2008. But that's, we help business owners, grow and exit their companies, and then right off into the sunset. We help executives, D-suite, C-suite, SVP, VP executives. Ironically enough, one of our clients is a former founding engineer at Palantir. And he has done very well for himself for obvious reasons. But we own Palantir right now, so that's one of the. We can talk about that stock amongst others, but I'm not going to be Kenny. This is not going to be nearly as exciting for your fans.
Well, he sets a high bar, that Kenny Glick. You have a little bit of different time horizon, more of a trend following sort of approach. Correct me if I'm wrong. Than Kenny, which is Kenny's only mean reversion.
Yep.
Right. Intraday mean reversion only. And I think there's a time and a place for all of these things. Do you focus more on ETFs for client portfolios, individual equities, both, because it doesn't matter? How do you think about that?
When a client has, our minimum's $500,000, and for any account that's worth less than 150K, it's all ETFs, just for the fact that, if we buy a 2 or 3% position in, a Google, we can't buy 1 share. So anything under 150, whether it's a Roth IRA or something like that, brokerage account, we're buying all ETF portfolios. But everything from US, international commodities, currencies, we even own Bitcoin right now. So it's anything over 150 though is a combination of ETFs and stocks. But everything from our moderate growth and aggressive models have more NASDAQ based stocks, like our inventory is the NASDAQ. Whereas when we're looking at our balanced and conservative models, our inventories, more S&P and Dow.
Where do you think we are in the cycle right now? Like when you're talking to families and, households, and, you're kind of trying to give them some perspective on where we are, what kind of conversations are you having? What kind of feedback are you getting back from them?
I'm hearing a lot of people paying way too much attention to the news, and I'm getting more and more frustrated every day.
Paying more attention to the news these days than maybe a year ago or 2 years ago or 3 years ago?
I think they're paying more attention. Well, let's put it this way: it's political, unfortunately, but there is the left-leaning middle and the left in general are paying way too much attention to the news, and I'm worried that they're going to hurt their long-term growth.
Why is the left paying more attention to the news than the right? Because the
Because they're
right got their
freaking out.
guy.
I think they're freaking out. I mean, I don't know a lot of people who like Trump as a person, but it's like I think they're just freaking out because they're worried that a lot of the stuff they hear on the news is going to come to fruition, and honestly, it's a lot of the same stuff you saw when Biden was in office or Obama's office. The right's freaking out. So, I mean, I'm kind of a annoying centrist libertarian. I'm a fiscal righty and a social lefty. So, and ironically, I think that's probably 75 to 80% of us. We just, unfortunately, the media has this knack for pissing us off and driving wedges between us. And I think it's all a conspiracy to make sure that one of them always wins and there's never a third party, but I digress. But no, so right now I just hear a lot of people just, they're worried about a market top. They're worried, every piece of news that comes out that's remotely negative is, oh, this, I want to wait for things to go down before I buy, that kind of thing. So, I don't know. I mean, I'm hearing a lot of that lately and just trying to get people to focus on, where we are in the cycle, which is the beginning of your question. I think we're like just past, the middle hump. I think that, we're probably going to see some pretty good growth here. I think we're in an uptrend on all major market indices. I mean, small caps are another question. I mean, I still think that small caps have a long way to go yet before we see, a breakout and a peak, but I think that's what's coming next. I don't think that, small caps are going to erode along, and then mid caps and then large caps, and another crash is coming around the corner. I think that we have a lot of good to await here in this next, 6 months, year. I mean, I can't really see much beyond that, but I don't know. I'm optimistic.
When you talk about how we're like halfway through, and then you talk about small caps,
Mm-hmm.
do you think that we can you think there's a chance that we can go through this entire bull market cycle without small caps breaking out of this base, without transports breaking out of this base, and we just have a complete cycle without either of them making their moves?
I don't know if it's ever happened before. You guys would know better than me, but I guess it's possible. That's one of those things that will be on the news for months, right? It'd be the century-long melt up. This has never happened before. This kind of thing, but yeah, I mean, the biggest stocks on the major market indices are the ones that carry the indices. So, I mean, it's entirely possible mathematically to see, small caps act as this really weak anchor that just keeps, getting pulled up by this bubble that stays buoyant in the large caps and mega caps.
And speaking of the Polish zloty, what do you make of this?
What?
and what do you make of, as a financial advisor, talking to households about the market, what do you make about this international outperformance? Do you think it's got legs? Certainly something we haven't seen in a long time. When you see things like Spain and Italy and Greece and Sweden and the Netherlands and United Kingdom and Germany and France. And I mean, I could keep going if you want, but I think you get the idea. Just so much resiliency and strength, despite whatever might be happening or not happening in America. Like, as a financial advisor with your time horizon and your mandates, how do you think about that? And how do you think about the next year, 2 years, or couple quarters even?
I wouldn't say that. First of all, I wouldn't say we have a lot of mandates in my world, being RIA. We're a fee-only fiduciary, so we don't have a lot of the mandates and compliance problems that a lot of the financial advisors out there do, thankfully. But as a fiduciary, we're inherently, on the hook with the attorneys. So if we do something wrong, we're on the hook. We're paying for it. So I think inherently we're more ethical in our space. But that being said, I think this looks a lot like, November, December of 2022. With international, I think we need more time to prove that this is the real deal, because even in November, December 22, beginning of 23, we had this nice big breakout, relatively speaking, between international and domestic, and we went long with like 10% international, then we pushed it up to 20 as we moved into late springs, early summer, and then it just broke down. So I think this is probably a dollar story more than it is an international story, with some anomalies, like some of the countries that are just kicking ass and taking names. But I think that because we're seeing the US dollar, what it peaked in December, I think it was, and now it's starting to fall. I think, I just pulled it up here. Like the ETF UUP is just sitting up on its 200-day moving average. So if it holds at 200, we've got potential support going all the way back to, we'll call it April of 24. So I don't know. I think that it's going to take a whole lot more time to see if a big, huge regime shift is taking place here. And we need to start overweighting international to get that alpha here in the US. I'm looking forward to it, though. I'll tell you that much.
Can you throw up slide 2 here? We are joined today by my esteemed colleague, Mr. Adam Koos, a proud Hungarian.
True story.
Right? Proud Hungarian, a true aficionado of the Hungarian Tokai we have here with Adam Koos. Great pairing for Key Lime Pie, by the way.
Yes.
So here we're looking at the Budapest index here, making new all-time highs. Again, if it was just Budapest, that would be one thing. But I could go down the list and rattle off all the countries that are making new highs, and we'd be here all night because it's a long list. How do you think about all, just the sheer strength?
No, I think that there's a lot to be said for this, and a lot of the countries overseas that are breaking out. They're printing all-time high as well. While the US and especially small caps kind of struggle. But that all being said, I guess it's just a matter of how I perform my analysis at my office, which is it's top down. I feel like, right now US is still the, in pole position. And I feel like we have to stay with that strength. I mentioned Bitcoin earlier. That still looks strong. And I do believe, by the way, as one of the few financial advisory firms out there that believes that Bitcoin is an asset class, by the way, or I shouldn't say Bitcoin, but digital currencies. So
you consider it a separate asset class altogether?
Yeah, it's kind of hard to decide if it fits in the commodity space or if it's just its own asset class. But I feel like it's in its own asset class.
Why? It's only $3 trillion, and some of these other asset classes are in the hundreds of trillions.
I think it's still young. I think that there's a lot more growth to be seen in that space. I think that for a while there, we all thought, when I say we, I mean you, me, all our friends, we kind of wondered if this thing was here to stay. I think there's no doubt it's here to stay. I think it's just which ones stay, which ones are going to stick and which ones are going to fall by the wayside. And what's it going to look like in, 5 years from now? What's it going to, I don't know. I think you've also got government support for it now. And I don't need to get in politics again, but it's like, when I don't know, when Democrats are in office and you're seeing solar stocks doing well, why would you want to not own solar stocks? Because your political opinions disagree with solar?
Well, the solar stocks actually did great under Trump. They did horrible under Biden. It was the coal stocks that were so good under Biden, which I find hilarious.
It's backwards, isn't it? And one more reason to look at the charts.
That's right. No, it's absolutely hilarious. Okay, let's go. I'm going to rattle off 4 charts, and then I want to talk sectors. Throw up slides 2 through 5 there, Mr. Spencer. So we're looking at here, S&P 500 still looks like an uptrend to me. Next chart, Dow Jones Industrial Average still looks like an uptrend to me. NASDAQ 100 still looks like an uptrend to me. And then the Euro Stoxx 600, which is the broadest measure of European equities. This is equivalent to the S&P 1500, including small caps, mid caps, and large caps, making new all-time highs. Like, to me, that sets the stage for sort of where we are now. When it breaks down to individual sectors and the exposure that you want to get, like, how are you thinking about that, right? Is it more technology, consumer discretionary, healthcare? Are you more utilities and real estate? Like, what are your thoughts there?
Yeah, we're still invested in industrials, even though they haven't, they've struggled recently. But again, you mentioned time frame earlier. Our time frame is more intermediate, like 6 to 12 months is my time frame. Excuse me, I'm coming off the flu here.
Oh, it's okay. So's everybody else. Don't worry about it.
Technology, discretionaries, luxury goods. So that's kind of where our focus is right now. It's going to be interesting though this year to see if we start to see some pivot, some rotation. Which I think we probably will. That would not be surprising. But right now,
rotation into what?
I think that technology that's been, struggling. I think technology is going to reemerge as a leader. I think that this whole narrative on TV that CNBC that technology's it's over and AI is over now. We've seen.
Are they saying that?
I'm starting to see this on interviews, because I always have it on mute on my TV in my office. But they're saying that the AI push is, NVIDIA is over, and it's like, come on, I personally believe that AI is like the next smartphone. When smartphones, people would tell us, oh, you're gonna buy everything on a smartphone. You're gonna like go on your phone and buy things and they get shipped to your house. You're like, yeah, right. That's never happening. And obviously we know how that story ended. I think AI is the next huge revolutionary technology in our lifetime. And so I don't think it's going anywhere anytime soon. So at the same time, I think that you can't just buy any stock that deals with AI. Kind of like, what was it? Remember back when Bitcoin first became popular and everybody was buying anything that, if you said you did blockchain and then it went up, like stock went up,
just like adding a .com in the late 90s, or
Right.
adding, right?
Exactly.
Yeah. Can you throw up slide 2, please? There's an argument to be made that some of these healthcare industries can be treated as maybe more defensive, like a Staples or utilities or something like that, perhaps. What about medical devices, which is basically these are technology stocks? These are robots performing open heart surgery, right? Making new 3-year highs. Like, do you look at this as part of that rotation that you see in bull markets, or do you look at it as maybe more defensive stuff?
I see it more as bull market driven rotation. Was it Ralph Eckenpour that says that sector rotation is the lifeblood of bull markets? I think that was his quote.
Yeah.
And typically you get not medical devices, but healthcare in general is more of a defensive position. But if you pull up utilities, again, last year there was all this talk about utilities having its moments of outperformance, and that signaling at the top of a market. And now we're seeing utilities haven't seen a high since early fall. And they're doing well this past month or two, but I don't know. I think that it's possible that the rotation, as we continue to move higher, because I think that's where we're going, by the way, is higher, is going to probably just frustrate a lot of people who are trying to pick the winner. So I think you just have to know your time frame, you have to know your strategy, make your rules, stick to your rules, and then you have to follow those rules. And if you change the rules midstream, you're probably going to struggle and get really, really frustrated with your own strategy, because you don't have a strategy if you don't have rules you're sticking to.
It is now we're past the halfway point of Q1, which is unbelievable. We're almost in March, the third month of the year. Based on what you've seen in terms of the start of the year, when you look back around the holidays, after Christmas, New Year's, heading into 26, looking back on it, what do you think is going to be the best performing sector for the year?
Ooh, that's a tough question. You sound like a reporter now. What's going to be the best performer by the end of the year?
This isn't basic cable television for morons. This is real life, Adam. I'm bringing in the tough questions.
Oh, all right. The best performer of this year. God, that is a tough question to ask. How about this? I'm gonna, because are we talking about a stock or a sector?
Sectors.
Sectors. Okay. I honestly think that technology is going to be the best performer. I think that technology is, this sector that people think that it can't keep going up. I think that it's going to defy, I don't want to call it common reason and say it's dumb money, but I think that, like if you look at the XLK right now, it's trading at the same place it was in June of last year. So I think that people are doubting it, but I believe that the All-Star Charts team was the first to ever call something in a bullish or bearish regime. And if you look at RSI, it tried to bounce below 30 on RSI back in August of this past year. Couldn't do it. Now it's just kind of bouncing around in no man's land. But I think this breaks northward, and I think that.
Yeah, and I don't want to, and I want to stop you. I don't want to take credit for that. Identifying bullish and bearish momentum regimes. I don't know for certain where we got that, but I can tell you for a fact I probably didn't make that up.
Okay.
I want to say it was Jeff DeGraff. To give credit, I love giving credit where it's due. Like you were quoting Ralph Eckenpour because you got that from him.
Yep.
You don't always remember where you learned some, but this was definitely not me. I'm pretty sure it was Jeff DeGraff. I love giving Jeff shout outs.
Yeah, he's got
like,
great research.
Or you're thinking technology. What's the worst performing sector for 2025?
The worst performing sector. I'm gonna say real estate.
Real estate, best performing sector. What about of the
No, no,
of the what
no,
about
I'm
of the
saying
sectors that matter?
I think real estate's going to be a bottom feeder. I don't think real estate's going to do well. And so was the question?
I was going to say any sectors that actually matter.
It's so funny you asked that because as I look at the sectors we've been focused on, it's just
Because the Dow has no real estate, the
No.
Nasdaq has no real estate, and the S&P 500 is like 2%.
it's I mean next to nothing. Yeah, I mean so I don't. Yeah, I mean I think that when I look at our sector weightings in our office in our model portfolios, it's technology, it's discretionaries, and it's industrials. That's where the focus is. When I look at individual stocks we own, I'm looking at Meta, Broadcom, Netflix, Intuitive Surgical, Costco, Cintas, Tesla, Constellation Energy, AppLovin, kind of a funny, like
Great name.
AppLovin, Palantir, Caterpillar, Salesforce, IBM, Amazon, and Amex. Those are the stocks we own right now. And then again, that anomaly being owning Bitcoin. But again, I say an anomaly because it's not normal. But then I'm still holding on to small caps. I'm waiting for that breakout before we go hard, and leverage up. But I mean, I don't know.
One last thing, I know you're a keen observer of markets. What do you make of all of the current pessimism in the market? Individual investors, newsletter writers, off the charts. The people you're speaking to on a regular basis, just anecdotally. Do you find that's going to be a tailwind for higher equity prices, or do you think they're actually going to be correct?
They're not going to be right. No, I think it's a tailwind. I think it's contrarian. I think it's, I think you do this long enough, like you and I, and you go through these waves, short term and intermediate term, and you start hearing certain things, and it's almost like they act as indicators, like sentiment indicators. And so, no, the newsletter writers, the people that I see on Twitter, the clients of ours who are freaking out, it's like I think that's bullish. When people start getting to the point where they don't care about their statements anymore. Nobody's logging into their accounts. They're going on an extra vacation every year, and they've just thrown all caution to the wind. That's when I'll start to maybe look at what people think and what they're saying is something that might matter.
Do you look at it? I mean, because you have like a unique perspective that I don't, right? I talk to financial advisors like yourself and portfolio managers. I'm not talking to the end customer. I'm rarely talking to the end individual investor. So you get that unique perspective, and I value that. Do you find like towards the end of the cycles, the biggest complaints are sort of the FOMO complaints? Why were we not in that? How come we don't have enough of that? Like, do you find that towards the end or no?
Yeah, I think toward the end, I hate to say it, but like, we'll occasionally get the person that's paying a little bit of more attention than the average client. And then they might say, hey, why don't we own more of this or what? And some of it's just a matter. I always chalk it up to lack of understanding. It's like, let's just say hypothetically, I don't know, that AppLovin ends up being just an absolute barnstormer. And over the next 2 years, like we sold NVIDIA at our office, but let's just say AppLovin churns out a 500% profit and we sell it. And we have somebody who comes in and goes, why don't we own more of that? I always go back to the story that I tell about a client who's unfortunately no longer working with us anymore. But back in, I don't know what year it was, but my staff calls me, I'm on vacation in Florida, and they say, hey, this client's calling, they want to talk to you. And I'm like, yeah, we're on vacation. Like, can it wait till Monday? And they're like, no, he really wants to talk to you about some stock. And I'm like, okay. So I'm irritated, and I go downstairs and walk outside so I don't, bother my family. And I call him back on my cell phone. I'm like, hey, what's going on? He goes, hey, he's like, how are things going? I'm like, well, good. We're on the beach. What's going on? He goes, well, I was just looking at how you bought Buffalo Wild Wings and then you sold it just 3 weeks later for like a loss of 6%. And I go, okay. I said, what's your question? He goes, well, like, why'd you buy it and sell it so fast? And I sat there, and I can't explain to you how mad I got inside, but you can't share that frustration with a client who's paying you, of course. So I said to him, I said, you know what? I never thought about it, but I should just buy stocks that go up. And I didn't say, and I just shut up because it's like, that's what I would call like, kind of like when I went long bonds, like I think it was summer of 23, I went long bonds for like 2 weeks. My maximum loss was like 1.7%. I sold at like 1.4% loss. Client comes in the office. I'm all excited about it. I'm like, oh, this is like one of the best losses I've ever had.
Yeah.
And after I get done talking about it, they're like, best loss. Like, what are you talking about? What's a good, there's no such thing as a good loss. I'm like, oh, there is.
Oh,
There's
there
a,
is.
There's a nice tight losses are amazing.
Good because, and Strazza, come on in here for a second. But, the way I look at it, this is so important, guys. If you guys are listening out there, any idiot could buy a stock that goes up. Like any idiot can do that. Like that's not the hard part. The hard part is what you do with the stocks that don't do what you thought they were going to do, right? So like with his whole concept, Adam, and I appreciate you bringing this up, of small loss, a great loss, like that whole concept, like that's a blog post. Taking great losses, right? Like that is like an educational moment that like, unless you've been doing this for a long time, you have a hard time understanding that. But a good loss is better than a good gain any day of the week. Because like I said, any idiot can buy a stock that goes up.
Yeah, it reminds me of a discussion I had with Andrew Thrasher, a friend of ours. Years ago, we were sitting there talking, and we're like, you know what? At the end of our conversation, we're like, you know what? When we figured out how to do this whole trading thing, it was the day we figured it out was the day we realized that everything we do is wrong. We're always going to buy too much, too little, sell too much, too little, buy too late, too early, sell too late, too early. And once you figure that out, the rest is easy.
Yep.
But yeah, I mean, it's so it's funny.
When you're right, you never own enough. When you're wrong, you own too much. You never sell at the top. You never buy at the bottom. Like everything is wrong. Like everything you do could have been better.
But we do have some people that at the end of the cycle, they'll say, we wish we would have owned more of that, but very, very, very few. I mean, most of them, like right now, what I'm hearing is people are either neutral, they're still nervous, they're worried that there's another leg coming down, like 22 wasn't bad enough. Then I'm definitely not seeing a lot of bullishness.
Adam,
what's going on, Steve?
We were just talking about risk management. I figured you'd appreciate that.
When I enter a trade, I expect to lose.
Yes. And that's where position sizing comes in. So you go in there expecting to be wrong on the trade, figuring out what the market would have to do to invalidate your position. And however far that is from the entry point, you figure out how much you're willing to lose in the off chance that you're wrong. And that's how many shares you should own or how many contracts you should own to express that thesis in the market. I mean, it's really that simple as far as I'm concerned.
Yeah, I heard what Adam was saying, and I get that feeling when I look at a chart that just has like a clean, clear polarity level, and we're right there. I'm like, why not? I'll take a shot. Yeah. If I'm wrong, what do I lose? 50 cents?
Right.
I'll take shots all day. So I get excited too, because I know that'll probably be a good loss when I take it.
And then when you take the loss, it's like, oh, I lost money. I knew that wasn't gonna work. That definitely.
Well, if it reclaims that line in the sand, then you can trade up. Be
okay. Last question. So you enter a trade, you get stopped out. It gets back above your level. You enter again, and then you get stopped out again.
Yep.
Gets back above your level. How many times is too many times?
That's a good question.
It's a great question. I ask it all the time.
I think that if I'm Steve Strazza or JC Parets, I think that in my opinion, if I were you being like sitting out here with no money in the game, right? I'm saying that I keep taking the trade every time until it breaks down or breaks out.
You're saying because we don't have to answer to anybody.
You are a mind reader.
Right. Yeah, and what about you who does have to answer to people?
I have to be really careful. It's sad, honestly. And I know I've talked about this on your show before and excuse me, written articles about it. But it's like the retail investor is sometimes shoots themselves in the foot. We had years when we've had a lot more trading, when markets have been really volatile, when we've been at a turning point in the market. I can quote, this client came to us. They no longer work with us anymore. And by the way, this is great when these people don't work with us anymore. It's like, we call them the dirty dozen. They come and they say, hey, I was talking to my health insurance agent who said that all these trades you've been placing are costing me a lot of money. And I'm like, we pay for all the trades. There are no trading costs for you. And she goes, well, that's not what he said. And I'm thinking, What would your health insurance agent know about whether or not you're paying ticket charges on your trades? And inevitably, they ended up leaving, and I don't know where they went. And we ironically got a phone call from them last summer talking about coming back now. I don't know where they went. They're clearly not happy wherever they are. But the point is, the more you trade in the retail investment market, when you're working for retail clients, not institutional clients, but retail clients, the more they get nervous. And you better be making money. When you're placing a lot of trades, you have to make money all the time.
If they're getting notices, are
Sorry?
they getting transaction notices?
Oh yeah,
Is that
they have
the
to
reason a lot of times? Yeah.
Yeah, I mean, we encourage them to turn their transaction notices to quarterly and electronic.
Yeah.
So they'll get them every quarter instead of daily, and that helps. But the more you trade, you've got to be making money. And if you're not making money, and ironically, of course, we all three of us know that when the trading turns up, it's not because things are going super well, right? I mean, you're holding on to your winners and you're letting them run. You're not placing a lot of trades. Like right now, we haven't been placing a ton of trades. I mean, we've had some rotation. I mentioned we sold Nvidia. I mentioned we bought AppLovin, back in late 24. Palantir, we bought that. So, I mean, but other than that, I mean, things are going well. So it's not going to be 2009, but it's going to be one of those years where when this cycle ends, all of us are going to be talking at the next CMT conference, or we'll be at a conference talking about like what was your aggressive portfolio's ROR? Who made the most money, and like the person who made the least is going to do really, really well. So I think we're in a very healthy bull market right now.
I appreciate that, ladies and gentlemen. Mr. Adam Koos. If you are in the Ohio area or anywhere in the world and would like to speak to a financial advisor, give Adam a call. How's that for a commercial?
Thanks,
Is that good? Am I allowed to do that?
Man. All right. Thanks so much for having me on.
Adios, Adam. Good talking to you. That was great. We have different guests on over time, and they have different objectives. They have different goals and strategies and focus on different asset classes, and I really like talking to the financial advisors and, picking their brain as to how they think about the market, how they talk to their customers, what they're hearing from their customers. It's very different than ours, right?
I admire these guys. I don't know how they do it.
Me neither.
I think they have truly some of the most difficult jobs in our industry. People suck. That's got to be so hard.
Yeah, but it depends. Like, for example, I'm a great client to my financial advisors. Like, I'm like their favorite client.
Right. It's not about you. It's got nothing to do with you.
Right. So I'm like the exception to the rule. Like, I'm a pain in the ass. Like, how do I transfer this money in?
Listen, you've heard the stories. You know what it's like.
Oh yeah, no, I know.
Horror stories. It's just human nature. And I think what he just said is really interesting. Like, think about it. You only get so many shots. I'll buy and sell the same thing. I'll get stopped out 5 times. I don't give a shit.
Right? So 5 is your number?
Nobody. What?
Is 5 your number?
I stop when I get emotional about it. If I start thinking like, oh, this fucking thing, like I better hit this trade, then I'm done. I'll walk away. I'll just stop looking at the chart for weeks. But if I'm like, I don't give a shit. I lost a couple bucks here or there. You know what I mean? And I'm going back at it. No problem. But once I start like thinking about it in bed and shit, no, I stop. Which really doesn't ever happen at this point, but it used to. I would get like upset about one. And then it would just become like a situation where like for me to win in my mind, I just had to get the trade.
Yeah,
eventually.
that revenge trading.
So if that starts to happen, it's no good. But if you can just remove yourself from the situation that maybe you lost on the same ticker a couple times and like not care about it, I think you keep doing it. What's interesting about what Adam said is, can you imagine, like, you only get a couple shots here. They start getting notices. Why are you moving me in and out of Disney, in and out of Disney? Like, and like he said, you don't have a good answer if it didn't work. You just look like an idiot. So that's got to be hard. It's got to be hard. I look like an idiot all the time, and no one knows. No one knows, right? And that's great for me. I don't think twice about it. I look like an idiot all the time.
I have friends. I have friends that are like trading very actively for their clients, and their clients have real-time access to every single trade.
Oh, no.
And it is like a nightmare for these guys. I'm like, why don't you have, because they have separately managed accounts because they don't have LPs. I'm like, why don't you have an LP, bro?
I would like make them sign something. You get to ask questions this one day of the month.
No, because
get
think
what
about
you
it.
say.
And then these clients are so annoying, and they're entering trades knowing that this customer is going to complain 3 seconds later that he just
Yeah.
got into this
Can
is
you
real
imagine
life.
that life? Yes. You're getting a call.
Imagine.
Meb Faber's done a ton of work on this. This is something that he feels strongly about, basically that humans are the biggest obstacle to their own long-term wealth, like and saving and investing successfully. So I think he's actually explored the idea of creating some sort of fund that literally locks up your money. Like that's mandated to like
Oh,
not
that's the
distribute,
only way to do it.
but it's not
It's
allowed.
it's an LP. You never see anything. You get a statement once a month. Take it or leave it.
Right. So he can't get that past the securities regulator for liquid public markets. Right. But
Right.
that kind of stuff does exist and private funds and stuff like that. But the regulators would never allow it because you know what would happen? People would agree and they'd say, fine, lock up my money. I won't bother you for 3 years. And then there's going to be a bear market and they're going to freak out.
Too bad.
It's just, again, I don't know if there's any right answer. The right answer is really education.
And the
It's really
right answer is
education.
to pick the right customers, right? Like there are certain people,
Or
they're going to be
educate
a
'em.
royal pain in the ass, and it's not worth it no matter how much of their piker assets they're transferring in. Pick your clients properly and fire them quickly. If you
Yep.
catch these guys being a pain in the ass,
Fair.
eat it. You're out.
Or teach them what they need to know.
And it
right?
feels
Teach 'em what
good.
they
It feels
should know.
good to fire these idiots. Like it's like cleansing.
I've always-
You're not smart enough or mature enough to be a client of mine. You're out. I don't care. See ya.
I've always thought there's probably very few things more rewarding than being an advisor to like a good client and really and changing essentially their families' lives for long after you've both died, right? But like also people suck. So like I don't know if I could do it.
My financial advisors are amazing. They help me with all kinds of stuff that I know
Yeah.
nothing about. I don't know anything about 529 plans. I mean, I do now. All kinds of like real estate, like creative real estate financing and stuff like that. I don't know anything about that stuff.
Yep.
Employee benefit plans, like none of that stuff. I don't know I mean, I've learned some stuff, but only from the financial advisors. Have a good financial advisor, even if you're in this business, because like I do this every day, but I don't know anything about that other stuff.
Well, and I would just I think we have the data too. One way to do this successfully is shout out to our friends over at Ritholtz. They teach people the basics about financial markets, right? And all these important lessons, and they write about and they blog about and they write books about it. And then the people that read that content and understand it, reach out to them and become clients.
No,
so
that's
they're
true.
like, that is, I think, wow, what a model. And you see it working out here these past few years.
Did anybody else just flip the book long Home Depot?
Listen,
Home Depot.
Did anybody else just flip the book long Home Depot? Put it
I'm
up.
interested. I like Builder First Source here. I'm gonna listen. I'll trade the nail.
Home Depot was quiet all morning. They
Yeah.
reported hours ago. It was quiet. It was quiet all morning, and now it just broke out here.
Throw up slide 2. I like a starter position here, and then you really flip the book long above 420.
Yeah, classic non-top. I like it, and this
Still
goes.
false start.
Very
this
light
is your
light
vehicle.
guidance. This is interesting.
Hold on, this is your vehicle to express a bullish home builder theme. I really think is what you're saying. Those trades are going to work together. There's
Bullish
betting on
home
a failed
builder
top.
theme.
Yeah, home builder is going to dig in and fail their top. Home Depot's going to rip with that whole group. They trade together. It's a good vehicle. Expensive options though.
I like this a lot, dude.
So can we
Home
talk?
Builder's at 2% this morning.
How
The
is the-
XHB.
How are the numbers? Because sentiment is in the dumps around home construction.
I wouldn't say they were great. The earnings were good, certainly, but the guidance was not. The guidance, they actually missed on the top and the bottom line for the full year guidance numbers.
I got a hot take for you. Today's action, this morning's green and Home Depot has more to do with the bond market than their report.
Ooh, lower interest rates. Let's go bonds. Let's go yen. So this is Home Depot's a bullish yen trade, is what you're saying.
Yeah, fine. If that's the way you want to put it, I get it. Sure.
Home Depot is one of those companies. There's a dozen or maybe more that I actually like. I care about what they say in on the conference call because there are read-throughs to other areas of the economy and home
There's read
builders.
through. There's read through to the housing market, and
Yes.
that's really it, though. Like you're not gonna be like, oh, the consumer's strong. People are shopping at Home Depot. No, people are building.
No, I don't necessarily agree. I would say if Home Depot is saying that everything is all good, then I would say the consumer is probably strong.
I would say home
Right.
construction is strong.
They both could be strong.
No, but
right?
what Strazza's saying, it's more of an industrial situation than the consumer. I'm with Strazza on this one. I've come around.
These are big ticket items.
Yeah.
It's different.
Some of them. Anyway, I haven't
How
obviously
expensive?
I have not looked
mean-
at the report yet. I will after the show is over. Because I'm interested in and I'm along this theme anyway, the home builder theme. So I have a reason to care about this. But
I'm interested. I'm in the Pulte homes. I'm in the Pulte, but I'll own more home builders in the future as these start to look more like fail tops and less like actual nasty, disgusting, terrible, scary tops. All right, I got one for you guys. I got something. We got to talk about it. Let's talk about it. So, play along with me.
Playing.
Are you open-minded to a situation where potentially, say we look back, end of the year, right? We're recapping, year in review, and I say to you, S&P 500 had a good year. It's average. What's average? About 10%. Up about 10%. Not great, not terrible. International stocks on balance outperformed, right? That was the trade. International. Everything in the US did fine, not great again. Cryptos, dull, get smashed. It's a prolonged bear market. It's already began, right? When we look back now, it already began. And Bitcoin's trading around 60, 70K. We're making money in Chinese stocks. I say to you in December, Bitcoin's at 65, S&P 500's up 10%, China outperformed. Are you open to that scenario? Could it happen?
Bitcoin in the 60s and S&P
30-40%, just a standard bear market drawdown.
Bitcoin in the 60s and the S&P 500 up 10% in that environment to close the year, and at the end of the year Bitcoin still in the 60s. I think that's more difficult because of the relationship between the high beta stocks and Bitcoin. So I don't think a 10% year for S&Ps with Bitcoin in the 60s. I'm thinking about low single digits at best.
Okay, so international stocks are rocking, doing great.
15% for ACWI or whatever, yeah.
S&P 500 up marginally, 5%. Bitcoin could be in a 40% drawdown. Cryptos are awful.
In that
Nobody wants them
environment, the
anymore.
NASDAQ does the worst, the Dow does the best.
Okay, so there's a bit of a value thing, right? Cyclical situation. Okay. So this could happen. What I'm trying to ask, the question that
Well,
I'm trying to ask,
I don't think a double-digit S&P with Bitcoin in the 60s, no.
Because of the strong correlation with the mega cap growths more than anything.
That's right.
So there could be a situation where beneath the surface we do a little better, like maybe the speculative growth stuff works, different corners, commodity stocks work, stuff like that.
Bitcoin in the 60s, high betas having a hard time. You got a lot of tech, a lot of discretionary.
Materials are the best performing sector.
Maybe. Yeah, energy. Yeah, sure. Healthcare. Yeah, sure.
The question I'm trying to ask,
said it coming into the year that I'd be surprised if healthcare wasn't the best performing sector this year. And I would be really, really, really surprised if it wasn't top 3.
We're getting involved. We're going to get some skin in the healthcare game today.
These medical devices, I got to tell you.
Oh my God, don't ruin it. Stop.
So Dow Jones Industrial Average, healthcare represents 15% of the Dow, third largest weighting. S&P 500 represents 10%. Healthcare is 10% of the S&P 500.
Hold on. Let me finish my. Why are we talking about healthcare? I'm trying to talk about crypto. The question I was trying to ask is,
you said,
can there be a bull market for stocks that continues to rage on in good health if we lose cryptos and Bitcoin? Because we've already lost cryptos. I got news for you. You've lost the whole.
It can still be a bull market. It could still be a bull market, and the S&Ps put up single-digit returns, low single digits. Tech underperforms.
Right.
Global equities continue to rock. Shout out to the Krona.
So I guess this is great. Listen to JC's open-mindedness, everybody. Just remain this mentally flexible as we, move forward this year, because there's some strange stuff going on. There's some intermarket relationships that we've gotten used to that are kind of dislocating, at least for now. And just own the stuff that's working, own the stuff that continues to trend well, and then cut the stuff that's not. I think with these cryptos, I'm seeing top after top after top. If it's a top in Solana, it's a top in Coinbase, it's a top in MicroStrategy, it's probably a top in Bitcoin too. Don't stand here and act like Bitcoin is different. Get rid of your laser eyes. Bitcoin's no different. If every single altcoin around the world's in a 60% drawdown, and you're looking at this formation in Bitcoin that looks freakishly similar to this top that just broke down in Solana, it's probably a top, and it's probably going to look a lot more like the others soon. So I think you could short crypto here, but you definitely want to get out of the way. And I don't want to own these tops and give back some of the money that I've already made in this bull cycle. I am long MicroStrategy puts, and I'm long MSTZ.
What invalidates this bearish thesis? Back above 91, 92?
They repair the damage. They scoop and score, right? They fail these tops. But right now, these are valid tops. And we're getting downside follow through. We're getting confirmation they're valid tops. Bitcoin's topping out right now, too.
Yep.
You can't own them. You could buy them back, guys.
Yep.
I think it's weird, too.
I'm with you. I really don't give a shit at all. I'm with you. Totally with you.
I'll be completely honest. I don't like it. I'm not happy about all this. I'm not happy to report this bearish news. I got a lot of things now I got to sell. It sucks.
Math. Just math. Just math.
Oh.
Yeah, Spencer's going to drop the post from yesterday that Steve Strazza dropped. Strazza messaging me last night. People should read this, JC. We should send this to people. This is really good, he's telling me.
Nobody reads my shit.
Well, ladies and gentlemen, if you would like to read his shit, you can click the link there in the chat. Go ahead and read all the shit. Read it all. Right, Strazza? Too good.
Read it all.
Too good. Let's do a little recess and get back to work. What do you say? I just want to say I did legs yesterday with Maggie.
Here we go, the leg guy.
I did legs yesterday with Maggie. Dude, I was struggling, man. Like all that champagne and like all the boozing in Fort Lauderdale, like I was winded, man. And then like for whatever reason, she said it was cardio legs day. I'm like, oh, fuck.
She kicked
So
your
I
ass.
was struggling. So in the future, don't do cardio legs workout immediately after getting back from binge drinking on vacation with your wife for 3 days. So just note to self, bad. I mean, I was just cotton mouth, my lungs, just the whole thing. Like, I don't know if like it was good that I did that. It was terrible. It's terrible.
Exercising my legs depresses me. I hate it, and I'm sore for days, and I just want to lay in bed, so I stay away from it. I don't do.
No,
things
but if you
that
do it
make
on a
me-
regular basis, it's less
I know.
impactful.
Perlman says that. I don't know if I believe him. I try to stay away from things that make me as unhappy as exercising my legs.
Dude, I almost died yesterday at the gym,
Right.
and I feel
Yeah, I
fine right
can't
now.
do
I'm barely even sore. So like,
Did you have a lot of-
I've been going hard,
Were you drinking a lot of day champs at the beach?
dude.
Day champs?
I mean, I shouldn't be saying this out loud because it sounds like I might be crazy. Dude, I took 2 bottles of champagne to the Dome on Saturday afternoon.
Good for you.
Wait,
Dude,
you
that's
deserve it.
impressive.
can I ask a champagne question,
Good for
JC?
you.
Yes, please.
How does one
2 bottles
store
to the Dome.
Nice.
how does one correctly store champagne? Just
In the refrigerator, Spencer.
like if I had some champagne in my house, hypothetically speaking, how would one store that correctly? I don't usually have champagne.
Sideways, first of all, so the leaves don't fall.
Okay. And then the fridge?
It doesn't have to be in the fridge. It
Okay.
can be you just want it to be at a consistent temperature.
Okay.
Put it in like a basement, right?
You want it to be in the 50s. Like a basement is like the perfect place for it, especially in my basement. But yeah, you want it to be like in the 50s and just steady because the ups and downs in temperature
Okay.
just it ages the wine faster, destroys it. So you just want consistency,
Good
and you
to
want to lay it on its side.
Thank you. All right.
Twitter Space is 1 hour. Don't miss it.
This is not an emergency spaces, but you need to be there nonetheless because
That's right.
things are happening. All right.
It might as well be. I mean, I'll be obnoxious about some of the positions that we put on, and Coinbase was one of those that I don't know if we've talked about another stock more. over the course of the past few years. We were all over that reversal. We were in the 40s. So, we wrote all about it. So I feel a duty to kind of, mention that I'm out of that trade now. It's been two years, 2 great years. So maybe it is an emergency.
And you can still have a crush on Brian Armstrong, like a man crush, and not be
I'll
in the
be
stock.
back. I'll be back. I'm going to buy the hell out of this stock again in the future. I'm not going to own it here. JC, think about it this way. This is the best news for Coinbase in years.
Mm-hmm.
The best news. Stock was up 10, 15% if they dropped this headline last year.
No, you're right.
Instead, they dropped that news. He's doing the media circuit and the stock's completing a top. It's just not right. It doesn't add up for me. It's not bull market behavior.
Yeah, buy the rumor, sell the news. Classic.
Michael Saylor just met with the SEC. They were talking about his Bitcoin strategy being illegal 2 years ago. Now he's having private meetings with the SEC. What's MicroStrategy stock doing? Breaking down from a top on the news.
Yep.
It smells bad.
Yeah.
What are you going to do?
New 3-month lows today for
All right,
Microsoft.
guys, give us a like. Check out all of our videos on our site, on our channel, all of our shorties. Give us a follow if you haven't already on all the socials. We're posting stuff all the time. Thank you, Adam Koos. Thank you, Kenny Glick. Thank you, chat. As always, Spaces in an hour. And we'll see you guys tomorrow, all right?
Adios.
Adios.
I can't take no loss. I don't even know what it costs.